Hi guys, so this is an RTP for May 2023 for CA final audit students. So here I'm going to cover complete RTP in depth. Now, if you look at this RTP, it has been broadly divided into two sections. Section 1, nothing but part 1 of this RTP is dealing with academic update, nothing but amendments part it is dealing with. Very recently, some 2 or 3 weeks ago, I have already uploaded amendments part. Complete amendments video I have uploaded. If you note, if you observe, the amendments were in the following chapters. In company audit, small company definition limits has been changed. Like now, the paid up capital limit is 4 crore, turnover limit is 40 crore. Earlier, it used to be 2 and 20 crore. Now, it has been revised to 4 and 40 crore. That is one important amendment. Then we have amendments in audit committee and corporate governance. Nothing, don't worry. I have already made an amendments video clearly. I have clearly made an amendments video clearly. Just go through Harsha YouTube channel. Inside that, you just go through the latest videos which I have uploaded. You can see here, CA final audit amendments. Here I have uploaded clearly the amendments part. So inside this, I clearly explained. So the introduction to the amendments, NBFC audit related amendments. For NBFC audit, I have given entire NBFC audit related revision part. Why? Because if you want to understand what is the exact amendment in NBFC, you need to understand how the amendment has impacted on multiple provisions. So that is the reason why I have uploaded entire NBFC revision class where major attention was given for amendment part. Okay, many think NBFC amendment is very small amendment, or some people think it's a very complicated amendment. Either of these two, extremist, getting it. But this amendment in NBFC has an impact on multiple areas. So you need to watch that NBFC amendments thoroughly, and that has been tested in this RTP. Okay, fine. Please watch this video, especially this introduction, 15-20 minutes without skipping, because here I'm going to talk about few important issues. Next, then peer review guidelines. Entire peer review guidelines related marathon topic has been uploaded clearly here. Getting it? Then NOCLAR. Yes, for May 23 exams, NOCLAR is applicable. So related video has been uploaded. And in the ethics, regarding NOCLAR clarifications, regarding minimum fees that is to be charged and disclosures to be made to the institute, there were some additional amendments that were also given. Now, immediately you might get a doubt. Sir, where is audit committee LODR regulations related amendments? That point is clarified in this video. Please watch that. And along with this, you can also watch our marathon classes. If you observe, 1 month ago, I have uploaded CA Final Audit Marathon Part 1 and Part 2. So inside this, most of the provisions I have covered. At least 60 to 70% of the provisions I have covered. If you watch these marathon and the amendment part and then come and watch this revision, you will understand excellent. You will get a good clarity on the RTP. Now, one more thing. Very recently, I even uploaded, how to crack CA final audit, especially how to score minimum 50 marks. If you are able to dedicate 48 hours of time, if you are able to spare 4 days, getting it. So you will be able to get more and more confidence on the audit subject. So regarding that, I made a video very recently clearly. Next, I'll come back to the amendments part directly then without any other discussion. So exactly what is the status on amendments? The part 1 of the RTP, the concerned video I have showed you. Part 1 of the RTP, the concerned video, amendments video I showed you now. So please watch that. Now in this video, I am exclusively focusing on solving the question and answers given in the RTP. Generally, RTP will be, in RTP, the type of questions that are tested are something complicated. Generally, from RTP, the standard at which the questions were designed are very complicated. So don't assume the same standard will come in exam. No, not at all. In exam, the paper will always be moderate. Maybe from your preparation angle, it may be very tough. But compared to the RTP standard, in examination, the papers will be generally easy. So how the institute can think, if at all they want to give the paper in the toughest manner, best evidence is revision test papers. Same way, for last November 22 attempt also, I made RTP video where I focused only on MCQs and case study based MCQ, only RTP MCQs. You can also just watch that. Next, now, so without any delay, let me start. Observe, see, when you're reading RTP or when you're reading any other content, it's not about what you're reading. It's about how you're processing, how you're interpreting. That is what most important. So in this video, I am mainly focusing on the interpretation part, how you should understand, how a question can be twisted in different ways. All that I'm going to show you. Okay, now there's a case scenario which is given. So what is that case scenario? So Goods Deposit Limited is an NBFC registered with RBI under section 45IA of RBI Act, and also it's listed on National Stock Exchange. They have appointed ABC & Co Chartered Accountants as their statutory auditor for the financial year 31st March 2023. So there is a company called Gold Deposit Limited, which is an NBFC listed entity, appointed ABC & Co Chartered Accountants as auditor for 22-23 financial year. Next, Mr. J, the audit partner, nothing but the engagement partner of ABC & Co, extracted monthly net owned fund position from the books of GDL. So whatever the NBFC where he is acting as auditor, no, what is net owned position, net owned funds position as at on a monthly, at the end of each month, he has imported the report. So for 12 months, what is the net owned fund position of this company? He imported that report. Okay. ABC & Co was peer reviewed last in January 2019. So last time this ABC & Co was peer reviewed in 2019 January, and the certificate was valid until January 2022. Look at here. Indirectly, they are testing new peer review guidelines 2022. Inside that, there is something called peer review mandate. If you want to understand what is peer review mandate, what is peer review guideline, you need to watch amendments video. That's why I told you, before watching RTP video, watch amendments video and then come to RTP video. Getting it? In this RTP, many amendments were being covered. That's why. Now, so their certificate is valid only up to 22 January. Look at here. They are appointed as an auditor for 22-23 financial year, and that is a listed entity. Remember, it's a listed entity. As per peer review mandate, phase number 1, with effect from 1st April 2022, an audit firm must have peer review certificate in order to conduct audit of listed entity. It is mandatory. With effect from 1st April 2022, any audit of listed entity shall only be conducted by a audit firm having a valid peer review certificate. So having peer review certificate is a prerequisite. Getting it? Next, ABC & Co did not apply for peer review after January 2, 2020 till the date of acceptance of the audit. If at all without peer review certificate, if you are accepting the audit, it amounts to clause number 9. Clause number 9, schedule number 2. Non-compliance with the gap of professional ethics, professional ethics, nothing is code of ethics, 2008. Getting it? So as per code of, now code of ethics is 2020 code of ethics is there. So that one you can mention 2020, or you can simply say as per Chartered Accountants Act, no confusion. As per Chartered Accountants Act, schedule to clause number 9. If a chartered accountant in practice is failed to comply with audit gap, getting it, he is deemed to be guilty. One of the criteria where what they have given is, if at all you do not comply with, if at all you did not have peer review certificate and accepted listed entity audit, you are failing with the gap compliances, audit gap. Getting it? So punishment will attract. But in this MCQ question and answer, this point is not covered. But I'm reminding you this, there is a possibility that can also be tested tomorrow in your exam. Getting it? Fine. See, when you're reading the question, you should read in such a way. Don't get tensed. Don't assume something complicated is being tested. Oh my God, what if? Forget about result. Focus on reading the question and understanding the process. Most of the facts may not be 100% of the facts. Most of the facts given in the question, you should remember. That is how your focus of reading should be. Next. Now, they have given monthly net owned position. Okay. Now, the board. So, the board of the company, the board of this NBFC consisted of 9 directors, of which 5 were non-executive, including a woman director. 2 were independent directors. Out of the above, the chairperson of the board of directors was a regular non-executive. Regular director means probably non-independent. Getting it? And promoter of the company. Obviously, he is non-independent director. The company was not out of 1,000 top listed entities, which means here they are testing composition of board of directors as per LODR regulations. So this point is mainly talking about composition of board of directors as per LODR regulations. That provision is tested and there is an amendment inside that. Getting it? And what is that amendment is about? Watch my amendments video. One point, let me honestly admit with you, I have not read till date LODR regulations. I have not read. Okay, so the reason very simple. If I have to read and get an in-depth command on LODR, I need to read the entire board of directors and their powers, all that provision and SEBI provisions. If I read them, I can be a law faculty because in the law, almost I can say 40% of the syllabus is this only: board of directors, their powers, their duties, LODR regulations, SEBI regulations, all that. You have seen the law people. So that's why in my audit regular class, I will not discuss LODR regulations because it is very in-depth. It is interlinked with many company law provisions. So that's why even in this MCQ, if any LODR related question comes, I'm going to skip it. Okay. My objective is audit related provisions, which are predominantly discussed in auditing subject. LODR is predominantly in-depth discussion is held in company law. Getting it? Audit committee related provision, again, I'll discuss. Next. I hope until now you understood the case. Next. Now, what is the other information which they gave? During the year, Mr. J, who is Mr. J, the audit partner, recommended the board and the audit committee to have internal auditors, which means the company is not having internal auditors. As per section 138, internal audit is compulsory for all listed entities, and internal audit is compulsory for public limited unlisted entities subject to some criteria. Private limited companies also subject to some criteria. In this case, this NBFC is a listed entity. Definitely, internal audit must be there. Without internal audit department, how come this NBFC can continue? Section 138 violation. However, board of directors, citing budget issues, rejected the auditor's recommendation. However, board of directors assured that they would consider next year to have an internal audit department within the company. This is a violation. Now there is a question in CARO, if you recollect, CARO 14th clause. It is talking about whether the company has an internal audit department commensurate with the size of the company. They asked this point. You need to comment in CARO. In this case, you will qualify in CARO report that the company did not constitute internal audit. Getting it? Even though it is applicable, which is a violation of section 138. You need to qualify this in CARO. Getting it? Next. So that's it. This is the information which is given. Now let's look at what are the questions they are asking. See, right now we have read the information about the company, auditor, all that. Now let's look at this. Mr. J reported under clause A3 of master directions, NBFC, company auditors, Reserve Bank directions that GD Limited is not eligible to hold certificate of registration under 45IA of the Act, as during the year net owned funds went below the minimum required limit. You know what he mentioned, as per NBFC audit report directions. You know what is NBFC audit report directions? Again, you need to watch that marathon video or amendments video where I have covered NBFC in depth. Getting it? So what the auditor has mentioned that the company is not eligible to hold certificate of registration. He commented company is not eligible to hold because net owned funds went below the minimum required limit. You see, net owned funds went below minimum required limit. Example, you see all these cases. The minimum net owned funds is how much? 200 lakhs. But do you know, net owned funds position we should see only as at March 23 as per the provision. In fact, auditor has to give a certificate whether the company is maintaining net owned funds as at the end of the financial year. The auditor has to give a certificate. Let me open and show you my module 2. Just a minute. So this is something which I took in my regular class. Yes, this provision you see. This will be discussed very in depth in our regular class. I'll erase for you and show you. You see here. Every NBFC shall submit a certificate. NBFC shall get a certificate from the stat auditor and submit it to the RBI that it is engaged in the business of NBFC and is required to hold a certificate of registration and is eligible to hold it. Okay. And they should also get a certificate from statutory auditor with reference to position as at the end of the financial year, 31st March, to the regional director, getting it within 1 month. So the company has to talk about the position. Position means what? Net owned funds position, getting it. So at the end of the financial year, we need to see. We need to observe it at the end of the financial year. So whether every month NBFC maintain net owned funds position, every quarter NBFC maintain net owned funds position, not required. Getting it? Fine. So fine. Now let's continue. Management of the NBFC had a different opinion. That certificate pertaining to net owned funds from stat auditor is required with reference to the position of the company as at the end of the year and not based on the each month, which is correct. Management is correct. Now they're asking, kindly guide Mr. J with respect to the requirement as per the master direction. Every NBFC shall submit a certificate from statutory auditor that it is eligible to hold certificate, and such certificate should be with reference to position of the company. Exactly. The answer is directly A. The answer is directly, just a minute. The answer is directly A, option A. This is the answer. Whereas here they are saying shall submit a certificate at the end of each month. This is wrong. Every NBFC, see, when you're solving NBFC, when you're solving MCQs, don't try to find out only right answer. Try to figure rest of the three should be wrong or they should not be completely right. In MCQs, there is this technique. The answer will be either right. Sometimes the answer is not wrong. It is not wrong. It is not wrong. Or the answer is wrong. Or the answer can be not right. Wrong is more powerful than not right. Example. See, this is about completeness. Not wrong means it is right only, but not completely right. Suppose example, this classic example we'll discuss. If the auditor has identified any fraud where the amount is less than 1 crore or where the amount is more than 1 crore, it shall be communicated to board of directors or audit committee as the case may be. It's right, but not completely right. Getting it? In addition to that, it shall be communicated to central government within 60 days by filing ADT4. Correct? So sometimes within the MCQs, 4 options they'll be given, right? 2 options will be right and right, but there will be another option which is even more better. That's why you see, I discovered that first option is very right. I'm not moving to the next MCQ because read remaining 3 options. Remaining 3 options, are they providing better information than this? We need to check out. Second option, each month they are saying, so it is wrong. Every NBFC should submit a certificate from stat auditor that it is eligible to hold certificate of registration, and such a certificate shall be within to position throughout the financial year. It is also wrong. At the end of the financial year is enough. Throughout 365 days is not required. Only NBFC MFI, no, there is no such requirement. There is no such requirement. Every NBFC shall obtain a certificate from the statutory auditor that the NBFC is eligible to hold certificate of registration granted to it, and certificate shall also be obtained in respect of the position of net owned funds by the NBFC as at the end of the financial year. Able to understand. Next. So, just a minute. So that's it. I hope you clearly understood the first MCQ. Almost we spent more than 10 minutes reading this case study and understanding this. See, here I'm explaining it to you why it is right, why it is wrong, all that. That's why it's taking time. In exam, you will not have this much time. You have to be very quick in decision making. In order to have that quickness, you need to have very good command on the provisions. See, when I'm reading this, I'm able to pick up. When I'm reading this, I'm able to refer directly, what are the provisions applicable. That kind of command you should get. And you will get that kind of command only when you read and understand the provisions thoroughly. It's not about how many times you revise. It's about with what depth you studied them. That is important. Next, second one is regarding composition, regarding LODR. I'm not discussing. Please, you go through. Next, this one is, yeah, fine. At the time of accepting the question number 3, case-based MCQ, okay? At the time of accepting the audit of Goods Deposit Limited, the quality engagement partner objected that ABC & Co does not hold peer review certificate and hence cannot accept the stat audit. His objection is absolutely right. But Mr. J was opinion that ABC and Co was falling under level 2 level 2, level 1 and all were long back. Okay, now peer review guidelines, peer review mandate, phase 1, 2, 3, 4 phases were there. Yes or no? And hence, they're required to get peer reviewed once in 4 years. Kindly guide Mr. J with respect to peer review. No, Mr. J is wrong. His contention of Mr. J is wrong. Getting it? The firm is eligible. The firm is liable for peer review with effect from 1st April 2022. And remember, having a valid peer review certificate is a prerequisite for accepting listed company audits as per phase number 1 of the peer review mandate implementation guide. Getting it? Now here you see, every practicing unit falling under 11 category. No, this is wrong option. As per peer review mandate, practicing units which propose to undertake stat audit, whose equity or debt are listed in India or whatever, there is a prerequisite starting from 1st April 2022 having peer review certificate before undertaking. Absolutely right answer. B is right. Let us find remaining. Every practice unit falling at level 2, that level 2, the moment you find level 1, level 2, some classification, ignore that, because level 1, level 2 classification and all was there in 2021 peer review statement. Now, what is applicable for your exam peer review guidelines 2022, which were finalized by the institute in September or October 2022. Practicing unit required to wait for allotment of peer reviewer by the board once the name of the nothing such. So option B is the right answer. Next, there is one more issue. Mr. J wants to highlight the matter with respect to absence of internal audit function in his audit report under emphasis of matter paragraph. Again wrong. See, if the company do not have internal audit, the auditor has to qualify first of all. Where he will qualify, since for this NBFC CARO is applicable, under CARO we will qualify. Okay, now here the auditor want to highlight it under emphasis. What is emphasis of matter para? Emphasis of matter paragraph is a paragraph in the audit report. It refers to an information appropriately presented or disclosed in the financial statements. Only if an information is given in the financial statements, that information, that way it is presented appropriately. No misstatement in that. Only that information can be given as a reference in emphasis. Only some information which is presented in financials can be given as a reference in emphasis. Now here, the company is not having internal audit function where they are supposed to have. It's a breach of Companies Act provision. And moreover, CARO provision clause number 14 will attract where auditor has to qualify. How come auditor use emphasis of matter, which is not correct? However, management was of the view that audit partner was not right by disclosing the said matter as it was internal matter and the audit team has not identified any material evidence which could impact their opinion. Kindly guide J whether proposing under the emphasis of matter. First of all, management argument that it is internal matter is also wrong. Management is not right in their argument. They are right. Emphasis of matter para will not apply. That extent they are right. But it is internal matter of the company. It is irrelevant for stat audit. That argument is wrong. Now, you see here, EOM paragraph is included in audit report referring to so and so judgment is of important. Hence, reporting under that's wrong. Reporting under EOM is incorrect. EOM is correct, they said. So, which is not right. This is not right option. EOM paragraph is included audit report refers to matter. They gave the definition. Hence, reporting under EOM is incorrect. I think. Okay. Here they mention other than those presented or disclosed. Other than those means it's other matter paragraph definition. EOM paragraph is included with reference to matter. They gave other matter paragraph definition and they are saying it EOM. See how they can twist it. Next, EOM is included in audit report that refers to a matter appropriately presented or disclosed in financials that in auditor's judgment is of important for so what they tested in this MCQ is emphasis of matter paragraph definition and whether this can be done or not. So emphasis of matter paragraph definition is right. Last one, hence reporting under EOM is also correct. This option is absolutely right. This issue in internal audit department is not established by the company. It cannot be reported on emphasis of matter paragraph. So reporting under emphasis of matter is incorrect. That option is right. Further, here emphasis of matter paragraph definition also given correctly. So reporting under EOM is incorrect. Definition of EOM is also correct. So therefore, the answer is option C. EOM paragraph is included in audit report that refers to other than. No, that option is wrong. So other matter paragraph definition they are giving for EOM, and so that's it. So option C is right compared to all this. So next. Kindly guide Mr. J where he may be needed to report the absence of internal audit function in the company audit report. The auditor is required to report the matter in basis for qualification opinion paragraph as he was unable to place reliance. No, that is wrong. Because no, if internal audit report is there and if company did not permit him to use internal audit report, it may come under restriction on evidence collection. Maybe auditor can report, but this is not the case here. The auditor is required to report the same under paragraph 13 of the CARO. The auditor is required to report the same under paragraph 14. Internal audit is paragraph 14. Sometimes no, this kind of questions no will make me anger. Why do institute want to test which paragraph? In reality, do we write CARO? Do we make audit report without looking anything? I think people who are designing this question should grow up. They should grow up. They should not test these clause numbers. That should not be the attention. What should be the attention is on, what should be the focus is on the learning part, analytical part, not on the memory part. What clause number 13 of 4? So idiotic. If you personally ask me, sir, do you remember clauses? I never try. I never try to remember any clause. I try to understand what exactly they're dealing with. And since my understanding is very good, that's why my marathons are performing very well. Okay, fine. So these kind of people will be there who test numbers. So for their purpose, sometimes you need to remember members. CARO alone, you remember clause numbers also. And ethics. In these two cases, clause numbers you have to remember. What to do? People like them exist. The auditor is required to report the said matter. No, that's not correct. Key audit matter also will not come into picture. That's it. Clear? Next, independent MCQs. Mr. D is a practicing chartered accountant from Mangalore. He has been practicing as a sole proprietor for the past 2 decades, almost 20 years. Mr. D's daughter, Miss Yes, is a newly qualified chartered accountant who cleared the final exam just 3 months ago. Immediately after qualifying, she was also set up a sole proprietary concern and practice on her own. Very good. After setting up the firm, she printed her own visiting card as follows. Yes and Co Chartered Accountants, foreign name can be printed. Proprietrix Mrs. Yes. Here you see, she is recently qualified, man. 3 months ago qualified. How come she used FCA? She is actually ACA. If a member who is not a fellow but representing himself as a fellow of the institute is guilty of professional misconduct under part 3 of schedule 1, yes or no? I think clause number 1 or 2. Clause number 1 of part number 3 of schedule 1 is treated as guilty of professional misconduct. So with you will see this point. What are the professional misconduct for members in general? If a member who is not a fellow but representing as a fellow, suppose there is another provision, section 5 or 6. A person who is not a member of the institute but representing as a member, a member who is not in practice but representing him that he is in practice, first time 1000 rupees penalty, subsequent time 5000, that provision. If a person who is not a fellow but showing himself as an FCA, that will attract penalty here. So office, JJ Nagar, phone number, yeah, these are all can be presented. Only this is wrong in the visiting card which is shown to us. Now, in view of the above visiting cards, whether Mrs. Yes is held guilty of professional misconduct, if so, under which clause? Yes, she is definitely held guilty. Again, here they are testing clause numbers, all that. Why they test all this? No, Mr. Yeah, that is wrong. Yes, yes, you will be guilty as per clause number 7 of part number 1 of first schedule. Clause number 7 deals with showing professional achievements, all that. If you're trying to grab client by showing professional achievements or using some other designation other than chartered accountancy, then clause number 7 will attract. Then yes will be guilty of professional misconduct as was part 3 of second schedule. No, that is wrong. Part 3 of second schedule is dealing with other misconduct. Okay. Then yes will be treated as guilty of professional misconduct as per clause number 1, part number 3 of first schedule. This is absolutely right. So figure out 3 wrong answers. Automatically the balancing figure will be the right answer. Next, seventh one. Mrs. Adi and Associates, they are the stat auditors of Prakash Limited for the year 22-23. While conducting the audit, CS Saurabh, the engagement partner, noticed the following. Payments to various government employees not supported by any document. Payments without supporting evidences. Notices received from regulatory authorities. Payments of various fines and penalties. Heavy payments to legal counsels. Unusual cash payments. These are all indicators. These are all indicators of non-compliance as per SA 250. These are all indicators of non-compliance as per SA 250. When auditor is identifying any indicators of non-compliance, the auditor has to investigate those indicators and see whether there is any severe non-compliance. If there is any non-compliance, whether the same has been disclosed in the financial statements. If the same has not been disclosed in the financials, the auditor has to modify the opinion. CS Saurabh should consider the above as an indicative of doubt on accounting system. Wrong. Doubt on non-compliance. Exactly. Doubt on going concern? No. Doubt on internal controls? No. Right now the answer is D. Next. You have been given an assignment of audit of IT department of a public sector undertaking. So for some IT department audit, you got a checklist was handed over to you, which contain many questions like, are offsite data backups maintained? Are separate usernames and passwords given to each user? Periodical changes to password ensured? So now you are doing an audit, right? What is this type of audit? Is it a compliance audit, propriety, comprehensive, financial? Propriety means looking at the reasonableness of the expenditure. Comprehensive means where we cover everything, financial, non-financial, everything. Financial audit means, of course, we do books of accounts audit. We do whether procurements or as per controls are reasonable, all that. Compliance. The answer is actually compliance audit. The answer is compliance audit is the right answer because this compliance audit. Okay. So this example is also given in the PSC audit also. In the ICA book, it is given. Next, Sudarshan and Co. is one of the joint auditor of Trilok Insurance Limited. Mr. Mukesh, one of the engagement team member of the said joint auditor, was examining the expenses incurred in different accounts. So he is doing ledger scrutiny. While verifying the expenses incurred in relation to employees, Mr. Mukesh made a list of the same as below, which he was going to discuss with the senior. Okay, payment of salaries to employees 95 lakhs. It was added in employee remuneration account, which is correct as per schedule 3. Reimbursement of premium in respect of employee health cover. Health related expenditure can also be added in employee remuneration, which is also correct. Training and non-training as per schedule 3, whether it is division 1 or division 2 or division 3, non-training expenditure of an employee shall not be added to employee remuneration account. Getting it? This is added. This is one observation. Expenses incurred for medical treatment. Of course, it is also an employee remuneration and benefit account. Incentives paid to employees of the company who have solicited. So employees, some commission has been paid to them, so they have debited to commission account, which is wrong. Here remember, insurance incentives paid to commission agent, then that will be debited to commission account. Here amount is paid to employee, not insurance agent. Please observe this. Since it is paid to employee, commission account will not come. It will again come under employee remuneration account. Whether it can be said that Trilok Insurance has properly accounted for the expenses in relation to employees. The answer is no, they have not accounted properly. No. Training and non-training expense incurred should be bifurcated and shown separately, and expenses incurred, medical treatment not having health cover should be, no, that is wrong. Reimbursement of premium in respect of employee health cover should be included. Others, no, that should be included employee. Expense should be incurred towards medical treatment of employees not having any health. No, that is also wrong. Non-training expenses have to be shown separately, which is correct. Incentives paid to employees should be included under employee remuneration account. So this option is right. So they did wrong. So you need to say that it is wrong. No, it is not right. And you should mention clearly the reason. So that reason is covered only in the D option. So ninth question, the answer is D. Next. Paras Bank had an NPA account of Superas showing recoverable amount of 35 lakhs in books. It sold this NPA for 37 lakhs, sale of NPA. Whenever there is a sale of NPA, difference amount in sale of NPA, if it is a loss, it shall be transferred to P&L account. If there is an excess amount is received on sale of NPA, if any profit is received on sale of NPA, it has to be first adjusted against provision made on that NPA. Getting it? Let amount remain, credit the excess in P&L, that is wrong. Credit excess of 2 lakhs to provision for loss on sale of NPA. Sir, where this is covered, I have covered this point in marathon clearly. You just open my marathon, bank audit provision will be there inside that. So inside that, audit of provisions of banks, liabilities, audit of liability section is covered directly from the institute material. You can observe this point. That's it. So with this, almost all the MCQ questions were covered. I hope you are clear. That's it. Okay, now we need to discuss about the descriptive questions. So we'll finish descriptive questions clearly. Okay, I'll directly discuss the glimpse, main part of it. Yes, let's continue. So there is a question on standards on auditing, statements and guidance note. Don't think that all questions related to standards will be tested. Only few questions were tested here. So Mangal and Co. There is a firm of chartered accountants were appointed as stat auditors for Money Limited for the year 21-22. Okay. The audit team has completed the audit and is in the process of preparing audit report. And management of the company has also prepared draft annual report. The moment when I see annual report, I remember SA 720 standard, because 720 auditors responsibility relating to other information. What is other information? It may be financial or non-financial information other than financial statements and audit report thereon. That is annual report, included in annual report. So audit in charge was going through the draft annual report and observed that the company has included an item in the annual report indicating downtrend in market prices of key commodities and raw materials as compared to previous year. However, the actual profit margin of the company as reported in the current financial statements has gone in reverse direction. The company annual report shows there is a decrease in the price of the product, but here when you see the margin of the company as per the financials, it is increasing. Audit manager discussed this issue with the partner of the firm, who is in reply said that auditors are not covered with such disclosures made by management in the annual report. It is a response. It is absolutely wrong. As per SA 720, responsibility of the auditor is to read the other information, and if he identify any inconsistency between the other information and the financial statements, whether that inconsistency resulted in misstatement in the financials or other information, figure out, discuss with management, rectify that. So this is responsibility of auditor. Remember, auditor is not liable to give assurance on other information. He is only responsible to read, identify inconsistency, through that identify where the mistake happened. Is it in the financials or is it in the other information? If the mistake is in other information, talk to the management, tell them to rectify. If they didn't rectify, highlight that point in audit report, other information para. Next, do you think the partner is correct in his approach? Absolutely wrong. He cannot simply ignore that other information is responsibility. I know other information is responsibility of the management, but auditor, as an auditor, you also have responsibility under SA 720 to read the other information, identify whether if any inconsistency is there, discuss with the management, see whether management is rectifying that or not, you need to talk about, and the same answer is given. Next. See, parallelly, whenever you are reading RTP, simultaneously look at the answer also. That's it. Next. CAP, the auditor of Master Data Limited for the 21-22. He is the auditor for the company. The company requesting the auditor to undertake an exercise involving only verification of trade receivable for the half year ending 30th September. The company wants to be satisfied that trade receivables are properly confirmed and reconciled. In this regard, CAP has to verify arithmetical accuracy of receivables, get confirmation from third parties, ensure verification of reconciliation with the confirmation. Okay. He is in dilemma as to whether he can give a report providing assurance to the company in this respect. Okay. So here the question actually. Here he is in dilemma whether he has to give a report providing assurance to the company in this respect. So he is there asking whether assurance report can be given or not. First of all, if you recollect the standards, we have standards broadly divided into two parts: assurance based, non-assurance based. Example, here we have something called standards on related services, agreed upon procedures, compilation engagements, all that. Assurance based, again, we have divided into two types: assurance on historical financial information, assurance on other than historical financial information. Other than historical financial means prospective, projected, financial statements, all the future related financials. Historical financial, we have again two types of engagements: audit of financial statements, review of financial statements. These are the broad engagements which an auditor do provide. Now we provide assurance on which type of works. We give assurance related to audit, or we may give limited assurance related to review of financial statements, remember, and other than financial information about future. Now here, company is asking you to provide assurance report on debtors, where it will come under financial statements, only debtors it is not covered, and company is asking about past debtors, it is not about past, so it will not come under assurance, no. Auditor cannot provide assurance on trade receivables. Only on trade receivables he cannot, because the scope of standards governing them do not cover. You can either provide assurance on financials, or you can provide, that through audit or review, or you can provide on future financials. You cannot provide assurance on a particular item of the financial statements happened in the past. So it comes under which service? Related service, which is a non-assurance based service. Here you cannot provide assurance. You can only give, as you know, you can only talk about factual accuracy. You cannot talk about whether it is recoverable. Assurance, you cannot give any assurance on that. Assurance means what? Yeah, company is recovering, this much is there, company will recover in future. This is an assurance. Yes, company transaction is correct, it is complete, it is an assurance. You cannot provide assurance on debtors alone. So can guide Mr. P with reasoning assume that above exercise is undertaken. There is no, so they are giving one assumptions. Maybe you may be coming across, sir, it may come under 144 prohibited service. Ignore that. So the question is saying ignore all that. Assume that it is legally permitted. Assume that you have taken this assignment. How will you guide him? Explain with reason. So that is what they ask, which is something a different question I felt. Something different which I felt. So in the given situation, auditor has to verify trade receivables for the half year ending. Okay. This process is only a fact finding process and reporting exercise, correct? The auditor has to report the facts as these are, like he would do whether confirmation has been received or not. The auditor can issue an assurance report in case of audit and in case of review. By providing assurance, auditor confirming you the users of the financial statements, all that. The type of service described in the given situation, no, it will falls under related service. These are like agreed upon procedures carried on by the auditor. The auditor cannot issue an assurance report while providing these kinds of service. Related services, SRS standard clearly says in SRS, auditor can only do fact finding process. He cannot do any other. Due diligence is a related service. Agreed upon procedure is a related service. Agreed upon means what? Client is asking you, sir, please provide, regarding trade receivables. Getting it? So please verify factual accuracy, all that, and then just do that service and give us, sir. It's an agreed upon procedure. So he can issue, or he can only issue a report stating facts without providing any sort of assurance. He can report only on the facts. Therefore, he cannot give an assurance report for these types of facts, because there's only a factual reports, fact-finding reports. That's it. Then audit strategy, planning and memorandum. Here they asked in this question, very simple. What are the contents of engagement letter? I told very clearly in my very recent 50 days, 50 marks, how to obtain 50 marks. I told very clearly that, CA inter questions can also come. In the institute book standards, CA inter chapter, this is the SA 210 is covered in CA inter syllabus. What are the contents of engagement letter? And I even told my CA final students to watch my CA inter marathon for these topics. So that question is tested in RTP. There is a chance that this question can also be tested in your ultimate exam, May exam. Next. Suvrat Limited has a turnover of 2,100 crore and NDAs are applicable. The company is having various derivative contracts, options, forwards, all that, which were required to be valued at fair value, for which company got the fair valuation done through an external third party. Means company has used an expert. The stat auditors of the company involved an auditor's expert to audit valuation of derivatives. Okay. The auditor and his expert were new to each other. They were working for the first time together, but developed a good bonding during the audit. The auditor did not enter into any formal agreement. Whenever we have recruited an expert, whenever we are working for the first time, getting it, whenever the work is very complex, all that, whenever it is very material, there are some criteria where we need to enter into a formal agreement with expert. This is SA 620 question. I have covered this in marathon. You can watch it. Then there is a question on risk assessment and internal control. During the course of audit, CA Gautam is concerned with quality and effectiveness of internal control. Towards achieving this objective, he wants to assess and evaluate control environment. Okay. Guides A. Gautam with well-defined set of SOPs in assessment. So when do you say SOPs are well-defined? So what do you mean by elements of standard operating procedures? Segregation of duty should be there, rotation of duty should be there, yes or no? So there should be a documented quality control policy should be there. Only when all these elements are present, we say that it is a well-defined SOP. It's nothing but what are the elements of standard operating procedures? So that question is which is a straight question. Here the question is elucidate various indicators of significant deficiencies which will help you in assessing efficiency of internal control. What do you mean by deficiencies in internal control? Straight question. Risk assessment chapter. How do you approach to get benefits from the CAT? Straight question from automated environment. Then company audit, again, some key question, okay, where generally you will confuse. LIU Private Limited, okay, is a company based out in Mumbai. The company had an authorized capital of 200 lakhs and paid up capital plus reserves of 95 lakhs as on 31st March. Private Limited company, paid up capital reserves are given. During the year, the auditor Messrs Associate noted the following points. On 15th December, the company had a total bank borrowings of 75 lakhs. On the said date, company received a new loan of 30 lakh for a new project that was to be developed. However, the project was shelved on 17th December due to technical reasons and the whole loan was paid on the same date. I feel like Caro, paid up capital reserves is given, borrowings criteria is given. The company has a total borrowing of 75 lakhs. On the same date, they received a loan of 30 lakhs. So, which means the total loan is 105 lakhs. Total loan amount exceeded 1 crore. Though it is repaid on the 17th December, though more than 1 crore outstanding 2 days only was there. Remember Caro applicability provision. If the company had an outstanding loans of more than 1 crore at any point of time, means even on one day if it is there, Caro is applicable for that private company. Fine. Don't conclude. There is so much crux in this question. During the financial year, a new proceeding was initiated against the company for holding a Benami property worth 2.5 crore. However, the company legal team has advised that the case would not withstand the law and would be dismissed under the hearing in the next financial year. Okay, so as on 31st March, the case is still pending. It will be dismissed in the next year, it not in the current year. Fine. The company had incurred a cash loss of 39 lakh during the financial year compared to a cash profit of 15 lakhs in the previous year. The total turnover of the company is 45 crore. This creates an impact in this question. Now you see, if you recollect Caro applicability, overall Caro applicability, Caro is not applicable for banking companies, insurance company, electricity company, Section 8 company, 1% company, small company, and private limited company subject to 4 conditions. On this, I have clarified in my regular class and revision class also very clearly. If at all a private company satisfies small company definition, you need not check private limited company exclusive 4 conditions. Not a subsidiary of holding, not a subsidiary, not a holding of public company, paid up capital reserves not exceeding 1 crore as on balance sheet date, total borrowings not exceeding 1 crore at any point of time during the year, total turnover as per schedule 3 do not exceed 10 crore as per the financials. This private limited condition you need not check. If private limited company satisfies small company definition, if a private limited company satisfies small company definition, it is treated as small company. Caro do not apply. But here they mentioned that capital of this company is less than 4 crore. If you check capital of the company, 95 lakhs paid up capital plus reserves both put together, how much it is? 3 crore, less than 3 crore. But moreover, paid up capital is only 2 crore. As per small company definition, paid up capital limit is up to 4. So less than 4. But turnover is breached. Therefore, it is not a small company. Since it is not a small company, come to the next condition, private limited company condition. How we need to apply. Since this has not satisfied small company definition, come to the next. Turnover is exceeding 10 crore. Here, turnover is 45 crore. Obviously, it falls under the last clause of the Caro. Therefore, Caro is applicable for them. Fine. During the year, the Y&S associates had offered to resign from acting as company's auditor. Okay. They offered to resign. They did not resign, remember. However, they later decided to postpone the resignation to the following. Okay, they didn't resign. At the conclusion of the audit, there were difference of opinion between 2 article assistants, Jack and Jill, who were assigned to engagement Okay, concerning disclosing above points in the CARO. Okay, Jack was of the opinion that proceeding initiated under Binami need not be disclosed since legal expert informed that case will not be stand in the law. That is wrong. As on 31st March, there is a proceeding pending against the company under Binami proceedings, right? Yes or no? Fixed assets related one, there you need to mention clearly under the 5th point of the fixed assets. However, he insisted that cash loss shall be disclosed along with amount, which is correct. Jack is correct with respect to cash loss point, but Jack is not correct with respect to Binami proceeding point. What Jill is saying, Jill was of the opinion that CARA is not at all applicable to the company, which is absolutely wrong. Hence, nothing needs to be reported. They both approached the firm's partner to resolve their argument. So they approached you. Let us assume Mr. Y supported Jack's viewpoint. Mr. S supported Jill's point. Now both the partners approached the senior partner to get clarification. So suppose you are the senior partner. As a senior partner, kindly clarify the following requirements. Now you see here. So here you just have to write the CARO applicability provision. You need to clearly mention that since a company turnover is beyond 45 crore, getting it? It is not a small company. It falls on it is not a small company. Therefore, CARO is applicable. Getting it? Since and further, if any Binami proceedings are pending against the company as at the end of the year, it has to be reported in CARO. Cash losses shall be reported. So therefore, the opinion of Mr. Y, yes, read this question and tell who is right, who is wrong. That's it. Answer is done. Read the answer. Remember, whenever you read a question and figure out the answer, that is not sufficient. Here I'm telling you just figuring out the answer, how to interpret the question. Read always the answer given in this RTP. When you read full answer without skipping anything, your descriptive skills will increase. Audit report, next one. CAK is appointed as stat auditor for Seek India Private Limited. Okay, under the Companies Act for the first time. The company is preparing its account considering the applicable requirements of Division 1 of the Schedule 3 of the Companies Act. On scrutinizing company financial statements for an audit, it was noticed that notes to account shows aging of trade payables as per amended requirements of Schedule 3. The aging schedule forming was like below. So how much is outstanding to MSME? This is regarding which one? Trade payables, yeah. How much the company is having outstanding amount to MSME is 0. How much is disputed other dues, all that 0. Others less than 1 year outstanding is some 2 crore. Rest all other were outstanding for more than 1 year. Approximately 8 crore worth of trade payables were outstanding for more than 1 year, which is an indicator. Default in repayment of creditors. It's an indicator of going concern. Fine. Further. Besides above, current ratio, debt equity ratio, trade payables turnover ratio, net profit ratio, they have slipped drastically as compared to the last year from the original norms, standard norms. Most of the key ratios are in red. There is no other relevant information in the notes too. Regarding them, nothing is mentioned in notes. Okay. Further, on reviewing the bank statements of cash credit limit against hypothecation of stock, it was noticed that there is no debit transaction in the month of March. On inquiry, he came to know that the company's stock audit was conducted in January 22 and stock auditors have commented while reporting that the company had a negative drawing power due to high creditors. According to the banks have refused the debit in cash. Withdrawal of financial support from lenders and creditors is an indicator of going concern. Doubts about ability of the company to continue as a going concern. Further, upon inquiry of the management, it was identified that management did not have any major future contracts to boost the revenue. Absence of, any remedy. It's a material uncertainty related to going concern. Uncertainty is that there is no proper plan of action. When material uncertainty exists and there is no plan of action, the company has to disclose the fact in the financial statements clearly. If the company discloses the financial statements clearly, the auditor can give unqualified opinion and highlight that material uncertainty in the material uncertainty para. But in the given case, the company has not mentioned anything about going concern in the financials, even though going concern is affected badly. The auditor has to give a qualified opinion or adverse opinion as the case may be. Look at my marathon essay 570 related discussion and then read this answer. You will understand beautifully. Next, CA Bharat has been appointed as stat auditor of Rishabh Limited. The company, while preparing financial statements for the year under audit, prepared one additional profit and loss account that disclosed specific items of expenditure including the same as an appendix to the financials. So they prepared some additional P&L, something. CA Bharat has not been able to understand this as The additional P&L is not covered under applicable framework. Guide him as to how he should deal. This is nothing but supplementary information presented along with the financials. If supplementary information is presented along with the financials, clearly differentiated from the financial statements, then it is not integral part. Then auditor opinion will not cover that. If the supplementary information is presented as an integral to the financials, getting it, and it is not clearly differentiated from the financial statements, then auditor opinion will also cover that additional information. This is regarding SCA 700 supplementary information related question. This is regarding consolidated financial statements. So here CA Visud is auditor of Brilliant Limited, a parent company with respect to CFS. Okay, the management of Brilliant Limited has provided the list of components included in consolidated financials. As an auditor of CFS, CA Visud has to verify that all the components have been included, whether all the components were included in CFS, and review the information. Nothing but they're asking what is the procedure to be followed by CA Visud in respect of completeness of components that are liable for consolidation. Completeness of components. Even in the marathon, I've clearly mentioned this point. This is how a question can come and exactly tested in RTP. Like you need to verify investments account, you need to verify capital account, you need to verify the information given by the management, you need to verify legal documents. Like there are some procedures, there are some points which you need to verify in order to ascertain whether all the components were properly considered by the parent while consolidating, while preparing consolidated financials. Next, audit of banks. You see, this is critical question. If at all you watched the bank audit revision class clearly, if at all you understood liabilities of bank audit clearly, NPA norm clearly, and also regarding, correctly, out of order NPA cash credit, that norm clearly, you will solve this question. Otherwise, you cannot solve this question. BOT Limited is enjoying cash credit facility sanctioned from Nariman Point, Mumbai branch of KNB 250 crore. So the bank has got 250 crore worth of cash credit facility from one Mumbai branch, Nariman Point. However, for practical consideration, various sublimits have been fixed for borrower company for operations at Solapur, Pune and Nashik branches of the same bank. So total 250 crore cash limited. Maybe bank has divided them into 100, 150 for 3 branches. Branch 1, branch 2, branch 3. This is for withdrawal purpose, internal control purpose. The manager of the Solapur branch notices that there are no credit transaction in sublimit account being operated at Solapur branch for more than 90 days. You know, a cash credit, if it become out of order, then it will be treated as NPA. When a cash credit facility will become an out of order, it will become an out of order. A cash credit facility will become an out of order in this situation. If there are no continuously credits for more than 90 days, or credits were there but not sufficient to cover the interest, then that cash credit facility will be treated as out of order. Or if the cash credit facility has more than sanctioned limit outstanding amount, then also it is treated as out of order. And if a cash credit facility is treated as out of order, it is treated as NPA. It is treated as NPA. This point is covered in CA Inter Bank Audit chapter. Even your ICI book says refer CA Inter book. But anyhow, this point is again covered in your CA Final Audit of Liabilities Provision ICI book. In the marathon also I have covered clearly from ICI book only. So here, but remember here, whenever we check NPA norm, we need to check entire facility wise. Here, the facility is given by so branch for 250 crore. Supplements wise, Solapur branch wise alone, you need not check. Each supplement you need not check. As a whole facility, you need to check. Discuss the approach of CA Muni, Stat Branch Auditor, in the matter of asset classification of the above borrower account. Also discuss considerations for classifying said account at Solapur branch. So, how at Solapur branch they have to classify this account? A bank branch has to classify whether an account is NPA or not based on the entire facility wise. Entire facility is 250 crore for that customer. Facility wise, they need to check. If that facility as a whole became NPA, then each branch has to classify it as NPA. Not only that, other loans and facilities which the customer has taken, that also be treated as NPA. Please read this answer clearly. You will understand. Next, fiscal loss. It's a very simple question, not a big deal. Please go through that. So here it's a public sector company. The company has argued that since a private shareholding is there up to 40%, it is C&AG purview will not come. That is absolutely wrong. Government company definition you write and mention that it is a government company. Accordingly, C&AG only will apply. Then there is a question on due diligence, investigation, forensic audit, which is very easy. Okay, now let me focus on peer review question. secretarial staff, almost 1 hour, okay, fine. Secretarial staff of quality review board is in the process of preparing a panel for submission to the quality review board to enable it to initiate reviews of quality of audit services provided by members of icai, okay. The draft panel has been prepared by Mr. P, a junior staff of Secretariat, and it has been moved up in the hierarchy for vetting. Vetting means nothing but examination, verification. Mr. R, before being put up in the meeting, means the senior staff is done, before he placed this in before the quality review board committee meeting, they were doing the following consideration. What is a panel containing? There is a company called XYZ. It's an unlisted public company. It has a paid up capital of 450, 1200, and oh my god, and audit firm is CBB and Co. If you remember, scope of quality review by quality review board. There's an NFRE provision 132. There are 5 clauses where in all these cases, NFRA only will have the authority to conduct quality review. Quality review board do not have. Listed entities only NFRA can do. Unlisted entities subject to 3 criteria: capital not exceeding 500 crore, exceeding 500 crore, or turnover exceeding 1000 crore, or borrowings exceeding 500. Here, turnover exceeds 1000 crore. Therefore, NFRA will have the authority on this. QRB cannot have the authority on this for conducting quality review. And PQR listed entity, again, only NFRA can do quality review. QRB cannot do quality review. So Mr. R, who is the senior staff, should mention that these two only NFRA can do, QRB cannot do. So they need to remove this from the list. X insurance, unlisted. Insurance sector, again, special entities only NFRA can do. AAZ, unlisted. Manufacturing, all the limits are less than those. So only this quality review board can do. That's it. So, is the inclusion of names of audit firms corresponding in the draft panel to put up before QRB is appropriate? Not appropriate. Only AAZ is appropriate. Remaining all the 3, NFRA has the authority. QRB do not have the authority. Read the answer thoroughly, you will understand. Then we have professional ethics points. Professional ethics is like very easy. Very easy. Okay, let me explain anyhow. Mr. Yes is a practicing chartered accountant based out of Chennai. During the weekends, he involved himself in equity research and used it to advise his friends, relatives, and other people who are not in his clients. Apart from this, now by the way, here a CA who is in practice is doing an equity research. Doing an equity research, all that is absolutely permitted, automatic. You cannot provide retail reports. Clause number 11 of part number 1 of schedule number 1. A CA can be an equity research and he can advise to friends, relatives, all that, nothing wrong. This will not be treated as additional occupation. Even though it is additional occupation, no permission is required. Apart from this, he was also involved as a paper setter for accountancy subject in school in which he studied. Yes, automatic permission, acting as a paper setter, paper valuation, these are all permitted. Examiner, observer, these are all permitted in any exams, not only ICA exams. He also owned an agriculture land and was doing agriculture, automatic permission. Now, during the year 2021, heavy losses were incurred in agriculture activity due to natural calamities and misfortune, okay, and he has lost almost all the wealth and became undischarged insolvent, okay. When a member became undischarged insolvent, his name shall be removed from the register of members. After a few court hearing, finally in the year 23, he was declared discharged insolvent and obtained a certificate from the court stating that insolvency was caused by misfortune without any misconduct. If at all a person became discharged insolvent and not obtained a certificate from the court that his insolvency was caused by misfortune, if at all he did not get certificate of innocence, his name will be removed from the membership register. But here, this fellow got a certificate from the court that this fellow's insolvency was not out of any misconduct, out of misfortune, bad luck. Therefore, court mentioned him that he is innocent. His name will be continued in membership. His name cannot be removed from membership. You are required to comment the above situation with reference to section 8, chartered accountant schedules, all that. You read the answer, very clearly explained. Next. Write a short note on following. Categorization of NBFC carrying out specific activity. If you look at amendments notes, no. NBFC amendment, they were given with the side heading. So one side heading they tested directly. I told this point clearly in the amendments class. A question can come like this. In the amendments class long back, well before RTP was released, I clearly mentioned this. Exactly, it was tested. Role of risk management committee, qualities of operational audit, straight questions. With this, entire RTP May 23 is clearly discussed. Now, what is your duty? Read answers thoroughly. Single reading enough. You may have to spend another 1.5 to 2 hours. RTP will be done. Hardly with this video, another 1.5 to 2 hours. Totally 3 hours you spent on RTP where you covered many concepts. Okay, carry on. And by the way, at the end of this video, I'm going to attach, what are the videos? I'm going to attach my marathon video. I'm going to attach my amendments video. I'm also going to attach this 50 hours strategy video. Please watch them along with this. You will get a very decent clarity. You will get more confidence. All the best for your exams.